Who is CoreWeave? That's a simple question, and nobody is asking. This company seemingly came out of nowhere and is almost single-handedly driving the explosive growth of NVIDIA. And as AI mania reaches a fever pitch, NVIDIA, by extension, is almost single-handedly propping up the entire stock market. And so it seems only natural that people would be asking questions about CoreWeave. Who are the people behind it? Where are they getting their money from? But nobody is asking. Retail investors are just handing their money over. Financial press is just writing puff pieces about this company. Nobody is asking any real questions. What's up, guys? I'm Nobody Special, and this is part 2 of my deep dive into CoreWeave and NVIDIA and the people and the companies around them. In part 1, I interviewed Samantha Leduc, the founder and chief investment officer of Leduc Trading, and we established how CoreWeave and their $2.3 billion line of credit appears to be the singular driver of that massive earnings beat that NVIDIA just posted. And so this time around, we're going to look into CoreWeave itself. We're going to look at the people behind this company and their history, and we're going to look at where CoreWeave's money is coming from. Now, first, let's get to know some of the key players at CoreWeave. This is Michael Intrater. He's the co-founder and the current CEO of CoreWeave. And like the rest of CoreWeave's founders and senior leadership team, Michael is not a tech guy. He's not an engineer or a programmer. He's a hedge fund guy. And this is Brian Venturo. He's another co-founder of CoreWeave, and he's the current chief technology officer. And again, like Michael Intrater, he's not a tech guy. He's a hedge fund guy. And the third player here is this guy, Jack Hogan. Now, he sits on the board of directors at CoreWeave, and he goes way back with Michael Intrater and Brian Venturo. He used to be their boss. Now, CoreWeave also has a third founder. We're not going to meet him until a little bit later. Now, all three of these guys, they have a long history together. They go all the way back to the early 2000s, where they worked at a company called NatSource. That's something we're going to get into in part 3 of this series, and boy, you do not want to miss that one. But they also founded this hedge fund together, Hudson Ridge Asset Management. And all these people who are now the big shots at CoreWeave, they founded Hudson Ridge Asset Management on December 17th, 2012. Now, Hudson Ridge had nothing to do with artificial intelligence, nothing to do with cloud computing or GPUs or NVIDIA. This company was all about trading in natural gas futures. And despite my best efforts, there is actually very little information available on what actually happened at Hudson Ridge Asset Management. Now, I was able to find this chart here on rcmalternatives.com, and this chart shows the performance of Hudson Ridge Asset Management, here shown in green, versus the performance of the S&P 500, shown in light blue. And then this is the Barclays CTA index. This is a measure of a lot of commodity hedge funds' performance. So on the surface, it looks like Hudson Ridge Asset Management actually did pretty well for themselves. They way outperformed the S&P 500 for a couple of years, but then everything started to change right around 2017. Now, notice here in September of 2017, that was an inflection point for Hudson Ridge Asset Management. That was the moment when they first started to underperform the S&P 500. And once they started to underperform the S&P 500, that was pretty much it for the firm. They shut their doors in March of 2018. And right as Hudson Ridge Asset Management started to underperform the S&P 500, Michael Intrater and Brian Venturo and Jack Hogan decided to found a new company called Atlantic Crypto Corp. And you can see right here in Bloomberg, they were incorporated on September 21st, 2017, almost to a day when they started underperforming the S&P 500. These guys decided the natural gas business was no longer for them, and they started mining Ethereum. And it was at this point that the third co-founder of CoreWeave, Brandon McBee, joins the team, and they founded Atlantic Crypto Corp. And much like Hudson Ridge Asset Management, Atlantic Crypto Corp was a pretty unremarkable operation. According to Crunchbase, they were able to raise $1.2 million in seed funding. That was in February 25th of 2019. So these guys got into crypto mining during the last crypto bubble. And on October 28th, 2021, for the first time, the world heard the words CoreWeave. That's when Michael Intrater and Brian Venturo and Brandon McBee, along with Jack Hogan, filed with the U.S. Patent and Trademark Office for a trademark for the word CoreWeave. That was October 28th, 2021. That's when this small-time crypto mining outfit decided to pivot and become a cloud computing company. It was actually a really good bit of market timing because this was within just a couple of days of Ethereum hitting its all-time high, and the price would collapse soon after. These guys nailed the top. It was a great time to get out of mining Ethereum. And it was just a few days after these unremarkable crypto miners filed a trademark for the word CoreWeave and decided to get into cloud computing that some unexplainable things started to happen. That's when these guys entered the picture. Magnetar Capital. I want you to go ahead and put a pin in that one because these guys have history and they're major players in what's happening right now with CoreWeave and NVIDIA stock. And it was just 2 weeks later on November 10th of 2021 that for some reason Magnetar Capital decided to hand over $50 million to CoreWeave, a company that just 2 weeks earlier was this small-time Ethereum mining crypto outfit. Up until this point, all CoreWeave had been able to muster was a $1.2 million cap raise, and now for some reason Magnetar is giving them $50 million. And in this same press release, CoreWeave, now a 2-week-old company, announces that they have become an NVIDIA elite partner for compute. That's an awful lot happened considering that just 2 weeks earlier, these guys were just this GarageBand Ethereum mining outfit. Now fast forward to a year later, November 30th, 2022, ChatGPT takes the world by storm, and so begins the AI mania. Now, if you think Magnetar handing over $50 million to CoreWeave just 2 weeks after they transitioned from an Ethereum miner to a cloud computing company, if you think that was a little strange, then you're going to have a really hard time getting your mind around what followed the release of ChatGPT. Just 6 days later, December 6, 2022, CoreWeave secures another $100 million to expand their NVIDIA GPU offering. And who is the source of this $100 million? You guessed it, folks, Magnetar Capital. Just 6 days after ChatGPT was announced, Magnetar decided they're going to hand another $100 million on top of the $50 million they've already given to these guys who a year ago were just mining Ethereum. Now they've got another $100 million coming in from Magnetar. A few more months go by and the AI mania picks up even more steam, and that brings us to April 20th of 2023. CoreWeave, a GPU-focused cloud compute provider, lands another $221 million investment. And where do you think that investment came from? That's right, folks. Once again, Magnetar Capital. CoreWeave today announced that it raised $221 million in a Series B funding round led by Magnetar Capital with participation from NVIDIA. That's interesting. NVIDIA itself now getting in on handing money over to CoreWeave. We've also got other players involved here, former GitHub CEO Nat Friedman and a former Apple executive named Daniel Gross. Magnetar contributed $111 million this time, with the remainder coming from NVIDIA, Friedman, and Gross. Once again, Magnetar shoveling millions, this time $221 million, into CoreWeave, a company that didn't even exist a few months earlier. But we're not done yet, folks. Fast forward just a month later, May 31st, 2023, CoreWeave secures another $200 million in a Series B extension. And where did this money come from? That's right, folks, Magnetar Capital. What is it about CoreWeave that makes them so special that month after month, hundreds of millions of dollars is being handed over to them? And I hope you still got that pin in Magnetar, folks, because we're not done talking about them yet. But before we get to that, we've got to fast forward to just a few days ago, August 3rd, 2023, and the number gets even bigger. CoreWeave raises $2.3 billion in debt, collateralized by NVIDIA chips. And by now, you know where that money came from. That's right, guys. Specialized cloud provider CoreWeave has raised $2.3 billion in a debt facility led by none other than Magnetar Capital. This time they brought their friends along. We got Blackstone in on the action. Fun fact, Blackstone owns a stake in Magnetar Capital, but this $2.3 billion line of credit is the entire market cap of CoreWeave. Somebody loaned them the value of their entire company. What did they do with that loan? Well, of course, they bought $2.3 billion of NVIDIA chips. And what was the collateral for that loan? It was those same NVIDIA chips that they bought. Now, I want to add that there's other players getting involved here. In fact, every big player in Wall Street is now getting in on the pumping money into CoreWeave so they can hand the money right back to NVIDIA bandwagon. Other lenders in the facility include Coatue and Digital Bridge, as well as BlackRock, PIMCO, and Carlyle. These are the biggest asset managers in all of Wall Street, And they're all handing money off to this company that just 2 years ago, they were just a small-time Ethereum mining outfit. So at this point, you've got to back up and look at this whole series of events. Just 2 weeks after Atlantic Crypto Corp changes their name to CoreWeave, Magnetar Capital hands them $50 million. A few months later, Magnetar hands them $100 million. A few days later, Magnetar, along with a few others, hand them another $221 million. 2 weeks after that, Magnetar gives them another $200 million. And then a few months later, Magnetar, along with all the big dogs in Wall Street, give them $2.3 billion bucks. And speaking of that $2.3 billion line of credit, it was collateralized by these same GPUs that they bought with them. Now, I don't know if you guys have ever tried to sell a used circuit board before, but those things don't exactly hold their value. So do Magnetar investors and BlackRock and Blackstone and all these other investors, do they realize that their money is being handed to this company that nobody knows anything about, and that debt, worth the entire market cap of the company they loaned it to, is collateralized by an asset that will not hold its value? Again, nobody's asking these questions. The financial press is just writing puff pieces, and people are just piling into NVIDIA stock. And if you found yourself shaking your head at that $2.3 billion valuation for CoreWeave, don't worry, guys, that's yesterday's news, because this one just hit the tape. CoreWeave is now trying to sell an equity stake in their own company, valuing the company at up to $8 billion. That's as of just yesterday, August 30th. Now, guys, it's important to point out here that CoreWeave doesn't have some proprietary algorithm. They don't own the rights to any of the technology. The only thing CoreWeave has going for them is that Magnetar Capital will give them money, and they're able to hand that money right over to NVIDIA, and NVIDIA will sell them chips. That's the only thing special about CoreWeave, is that they own NVIDIA chips. So you're probably sitting there asking yourself, why on earth would Magnetar hand over tens of millions, hundreds of millions, and eventually billions of dollars to this company? There's nothing special about them. They're just a couple of natural gas guys that used to mine Ethereum, and now they buy NVIDIA chips. So as I was sitting there scratching my head wondering why is Magnetar just handing them money over and over again, I decided to dig into Magnetar. And when I dug into Magnetar, what I found was arguably the shadiest, sketchiest outfit in the history of the hedge fund business, and that is not a phrase I throw around lightly. Now, to get to know Magnetar Capital, I want to refer you to that memorable scene from the movie The Big Short. No, not that one. No, not that one either. Come on. Yes, that one. Thank you. This is the scene where Steve Carell's character met the CDO manager, and he sat there in disbelief about what a sleaze this CDO manager was. Well, this character was based on a guy named Wing F. Chow. There he is. Now, you might be asking yourself, what could this possibly have to do with Magnetar Capital? Well, as it turns out, Magnetar Capital were the guys that were helping Wing Chow put together those CDOs. Now, if you're wondering what a CDO is, they did a pretty good job in the movie Big Short explaining that using Chef Bourdain and the few-day-old fish. It's basically mortgage bonds that are such hot garbage that nobody would touch them with a 10-foot pole. So they take all this hot garbage, they put it into a bucket, they call it a CDO, and then they sell it to people, but they claim it's a very safe investment. Wing Chow was the one that was selling those CDOs, and Magnetar was the hedge fund that was helping Wing Chow put them together. And what Magnetar was helping Wing Chow do was one of the sleaziest trades in the history of Wall Street. Wing Chow was getting rich doing it, so he loved him. The banks went along with it because they needed to get that toxic sludge off of their balance sheets. And while this was going on, Magnetar was betting against those CDOs as Wing Chow was selling them to unsuspecting investors. And when those CDOs failed, those unsuspecting investors lost everything, and Magnetar Capital made hundreds of millions of dollars in what would become known as the Magnetar trade. And by the way, the Magnetar trade, that's not a good thing. That's like having a disease named after yourself. I don't want to be remembered for Jack Gamble's syndrome, being the first guy to die from some strange disease. No, the Magnetar trade is famous because what Magnetar did was such an unbelievably dirty move, and yet they got away with it. And that's what inspired this article in ProPublica in April of 2010, The Magnetar Trade, How One Hedge Fund Helped Keep the Bubble Going. The hedge fund helped create mortgage-based securities, in this case the CDOs, pushed for risky things to go inside them, and then bet against those investments, resulting in billions in losses for investors and ultimately making the financial crisis worse. It's a story of the perverse incentives and reckless behavior that characterized the last days of the boom. Magnetar was working with that sleazy CDO manager to make sure that the CDOs they put together was the most toxic, hot garbage in the world. Then Wing Chao, with the help of Merrill Lynch and the other banks, went off and sold them to anybody who could buy them. While that was going on, Magnetar was buying credit default swaps, i.e. they were betting against those CDOs. Now, the banks would eventually pay hefty fines for withholding that information from investors that, hey, the people who helped assemble this CDO are betting against it. Do you think the people who bought those investments might have wanted to know that information? The guys at Magnetar got rich by making sure the global financial crisis got even worse. They helped the banks get that crap off their books and onto the balance sheets of unsuspecting retail investors. So let me ask you something. Knowing what we know now, knowing how this unremarkable hedge fund turned into this unremarkable crypto mining company, and then turned into this unremarkable cloud computing company, and yet suddenly these guys, Magnetar, start shoveling tens of millions, hundreds of millions, eventually billions of dollars into this CoreWeave company, and CoreWeave turns around, funnels that money right into NVIDIA, and NVIDIA stock moons. Well, Magnetar, the hedge fund that's using CoreWeave as a conduit to flow that money into NVIDIA, has a history of putting together investments that are prone to failure, selling them to retail investors while they bet against them. How does that make you feel about those calls you're holding in NVIDIA stock now, knowing the company that deliberately made the GFC worse to make themselves rich are the ones who are funneling the money into NVIDIA? Now, I just want to add that nobody at Magnetar Capital was prosecuted by any of the regulators. The banks all had to pay fines, but Magnetar got away with it. And you can only assume that that would only embolden them to go even further. Now, I just want to emphasize, guys, that everything we've talked about here today, it's not illegal to hand $50 million to some GarageBand crypto outfit and call them a cloud computing company. It's not illegal to pile hundreds of millions of dollars into them. It's not illegal to pile billions of dollars into them. It doesn't look like any laws have been broken here. But then again, it didn't exactly look like any laws were broken during the GFC either. At least nobody got prosecuted for them. I don't think that was any comfort to the people who lost everything during that crisis. So long story short, the people that are propping up CoreWeave, the company that's propping up NVIDIA, the company that's propping up the whole stock market, has a history of putting together investments that are prone to failure and selling them to retail investors while they bet against them. I'm not saying that's happening right now, but they've done it before and they got away with it, and so there's no reason they wouldn't do it again. Now, that's just the story about where CoreWeave got their money from Magnetar Capital and a little bit of the background about Magnetar Capital. In the next chapter of this story, we're going to go back even further in time and talk about CoreWeave's founders and where those guys actually cut their teeth. And as just a little taste of what you're going to find in the next chapter, this article from just 1 week ago, worthless. Scientists warn carbon offsets are a dangerous illusion. You are not going to want to miss chapter 3 of this deep dive into CoreWeave and NVIDIA and the people and the money around this company. Until next time, live small and dream big.